Hello and welcome to ForeTrade Limited. In this video I'll be describing the importance of the economic calendar and how to use one. Most traders know how great the impact of economic indicators has upon exchange rates, stocks and the markets in general. An unexpected move in interest rates or highly positive or negative data can potentially cause a currency to skyrocket or dramatically fall. If you are not prepared for the release of data like this, you can miss out. It's really important then to know in advance when reports and data are due for release. An economic calendar provides this information. So let's go over to our real-time economic calendar on foretrade.com and I'll show you how to use one. First, access the Education menu and select Economic Calendar from the Market Analysis submenu. Here is the unfiltered real-time calendar showing all economic events from all countries this week. First of all though, be aware of the default time zone. Here we can see it's GMT. To adjust the time zone to your local time, find it here and click on it. If you don't remember this when using an economic calendar, it's easy to miss a trading opportunity. Now take a look at the screen and consider what information you need. On the left you have the filters button. In the middle here you have yesterday's, today's and tomorrow's. And this week's economic calendar. Let's say that you are interested in trading the euro-dollar. So you want to see the main economic events relating to the US and the EU. So let's click on Filters. A number of boxes are already checked. So let's click on Clear and then add Eurozone and the United States. Down below, the bullheads represent the importance of the economic events in terms of the expected volatility. So let's click on 3 bulls. On the left you can see the time the report will be released, the currency involved, the importance of the event and the event itself. So for example, this week you have core CPI for the United States. You have crude oil inventories also for the United States on Wednesday. But most important of all this week is the Fed interest rate decision. But let's go to last week. I'm selecting between the 1st and the 8th. So this is last week's economic calendar. Let's look at non-farm payrolls. The official monthly report from the US labor market. It's a market-moving event and it's a very important indicator that can affect the value of the dollar. The previous column lists the latest data that might be a monthly or quarterly figure. In this case, it's monthly. The forecast figure is one that economic analysts expect will be announced. This is an important statistic since the market is likely to react more strongly if the actual figure is different from the forecasted figure. The actual or current figure here is green since it's better than expected. So let's click on non-farm payrolls. Here in the overview section you can find a description of the NFP and guidance on how to read the indicator. A higher than expected reading should be taken as positive or bullish for the USD and vice versa. Click on chart to see what the CPI was in previous months. If you prefer to see the information in written form, click on history like this. Understanding results is also vital as it's necessary to understand the degree of importance to each result and to the statistics themselves. Let's quickly go to the unemployment rate as it's also a very important indicator released on the same day as the NFP. You may, for example, find that unemployment in the US remained the same, which on its own may be considered a neutral indicator. However, if financial experts and the markets were predicting a reduction in unemployment in the US, the markets might well react negatively, potentially causing the value of the dollar to fall. This happened in February when unemployment was 4.8%, higher than the expected 4.7%. The dollar then fell by 0.75%, although there are other months such as September where the figure was below expectations and the dollar grew. The value of the dollar is influenced by many factors, not just the unemployment rate. The same principle applies to other macroeconomic indicators, commodities and stocks. The prior expectations of the market must be taken into account. As I've shown, some sites, like ours, have economic calendars which list predicted figures before they're announced, although these estimates should be considered as such and not confused with the official figures announced afterward. As I hope you can understand, using the economic calendar is quite simple and is important no matter what trading strategy you use. We hope that you found this video useful. Please join us again at 4Trade soon.